we are living in a time of irreversible change. The Earth is warming, weather patterns are shifting, and entire ecosystems are under threat. But amid the challenge lies opportunity, an opportunity to lead, to act, to protect what matters. Across the world, companies, investors, and innovators are stepping up. They're not just adapting to a changing climate, they're shaping the path forward. And at the heart of this transition, carbon markets, carbon finance, and the power to ensure climate action. We are now witnessing what scientists have warned about for decades. Global average temperatures are rising, and with them, the frequency and severity of extreme weather. Those born in 1970 have already seen a 1.0 degrees Celsius rise. For someone born in 1980, it's 0.8 degrees Celsius, and for those born in 1990, it's 0.6 degrees Celsius. But that's just the beginning. The next generations, born in 2020 and beyond, are projected to face far more dramatic increases. This warming isn't distributed equally. Cities are becoming heat islands, glaciers are retreating, sea levels are rising, and entire ecosystems are being disrupted. Compared to someone born in 1960, a child born in 2020 will experience twice as many wildfires, 3 times as many floods and droughts, and 7 times as many heat waves. This means not just hotter summers, but disrupted food systems, more frequent insurance claims, infrastructure stress, and loss of life and biodiversity. Climate change is no longer a scenario we're trying to prevent. It's a reality we're trying to manage. That's why action today is critical. The good news? Business is waking up. In 2015, just 10 companies had formal climate commitments. By 2020, that number grew to over 1,000. In 2024, it has surged past 9,500. More companies are voluntarily disclosing emissions, setting science-based targets, and committing to net zero transitions. Why? Because climate risk is financial risk. And stakeholders, from investors to regulators to consumers, are demanding accountability. To meet these commitments, companies need tools, and carbon markets are one of the most powerful. There are 2 main categories. 1. Compliance carbon markets. CCM, created and enforced by governments. Emitters are required to buy allowances equal to their emissions. Highly liquid and globally interconnected. Valued at nearly $1 trillion. 2. Voluntary carbon markets, VCM. Not mandated by law but adopted by companies aiming to go beyond compliance. Credits are issued based on certified reductions or removals of CO2e, guided by independent standards like Verra or Gold Standard. Valued at over $2 billion and growing. Both markets play complementary roles in global decarbonisation. Let's break down how carbon credits are created and used. 1. A carbon project is launched, such as reforestation, renewable energy, or direct air capture. 2. Independent auditors verify the emissions reduced or removed. 1 verified tonne equals 1 carbon credit. 3. Corporates purchase these credits to meet net zero targets or regulatory obligations. 4. The revenue is reinvested into maintaining or expanding the project, allowing the cycle to continue. 5. Eventually, the credits are retired, taken out of circulation to avoid double counting. This model not only enables emissions reductions, but also channels capital to climate-positive projects around the world. Carbon credits can originate from a wide range of projects, each with unique methodologies and risk profiles. Nature-based solutions, including forest conservation, afforestation, mangrove restoration, and soil carbon improvement. These offer co-benefits like biodiversity and water regulation, but are vulnerable to natural disasters. Hybrid methods, such as ocean alkalization and enhanced rock weathering. Blending nature with chemistry to capture CO2. Technology-based solutions. These include carbon capture and storage, CCS, biochar production, and direct air capture, DATC. They are often more permanent and measurable, but also more capital-intensive and dependent on energy input. This diversity helps the market grow, but it also introduces different kinds of risk. While carbon markets offer huge potential, they also carry complex risks. Delivery risks before the credit is delivered. The project may underperform or fail. Natural catastrophes like fire, flood, or disease can wipe out forestry projects. Political upheaval may stop project operations. Infrastructure or utility failures can interrupt delivery. Counterparties might default. Cancellation risks after issuance. Errors in the methodology or verification may cause credits to be invalidated. New regulations or sanctions can prohibit usage. Overcrediting, issuing more credits than actual impact, undermines credibility. All of these risks have real financial consequences for buyers, investors, and lenders. This is where insurance steps in to safeguard the integrity of carbon investments. Delivery insurance covers forward credit buyers against non-delivery from any cause. Ideal for traders, corporates, or funds who rely on future credit supply. Cancellation insurance protects against the risk that credits become invalid or unrecognized. Useful for asset owners, ESG funds, and corporate offsetters. Lending insurance secures loan repayments for banks or financial institutions that lend to carbon project developers. Ensures climate finance flows with reduced credit risk. Insurance solutions enable confidence, capital flow, and scalability in carbon markets. Our solutions are built for corporates with climate targets and net zero strategies, investors and lenders exposed to carbon credit performance, developers building and certifying carbon offset projects, commodity traders dealing with carbon as an asset class. If you're financially exposed to carbon through purchase, investment, or lending, you need a risk mitigation strategy. Insurance provides that safety net. We make the underwriting process simple and transparent. To assess and price the risk, we only need the project ID or relevant registry number, the name and website address of the client or buyer, the number of credits involved in the transaction, the price per credit. From there, we can model the exposure, assign risk ratings, and provide tailored terms quickly. The world is moving toward net zero. Carbon markets are a crucial tool in that transition, but they must be protected. Our insurance products are here to strengthen trust, ensure delivery, and attract more capital to the climate fight. Let's ensure the transition and protect the value of climate action. Thank you for watching. At Gofeas, we're proud to support a more resilient, transparent, and secure carbon market. Let's ensure the future together.